happy weekend, traders. This is Rob Reinhold. I'm joined by Darren Fisher. This is the trading room for April 24th to the 28th. Now, we just wrapped up monthly options expirations, so we are looking forward to the next month. This weekend, we will be closing the books. Next week, we will be doing payouts. So let's take a look at how we ended the week last week. We have been calling for a pullback. We had reached a market top. We had reached that resistance, and we thought, okay, we're likely to get a pullback. And that's just what happened. And I tell you what, it was a very orderly pullback. And if you take a look here at the weekly chart, you can see here that it just drifted a little bit lower. We had runs, we had falls, but it just drifted a little lower. Nothing exciting happened this week. This week, we did get a little bit of a rise in the chances of a rate hike in the May meeting for the Fed. It was down to about 50-50, but over the past couple of weeks, it's risen. We're now at about 85%. So it's pretty much a done deal that we are going to get 25 basis points from the Fed. The market is digesting that very nicely. We started our earnings season for first quarter earnings. This week, we heard from Tesla, and they kind of crapped the bed. Tesla down about 9%. We heard from AT&T down about 10%. That whole sector, the communication services, telecom sector, got hit pretty hard. We heard from Netflix. They dropped but recovered. And then on Friday, we actually heard from Schlumberger, or as we like to call it at Maverick, Schlumberger. That's what we call the stock. We'll get into that here in a little bit. But they had some bad news. They actually missed earnings, but they raised their guidance. The stock still went down about 5%. So overall, as you can see here, it seems like the tech stuff was getting hit, and everything else was actually getting a little bit rewarded. If we take a look at the calendar last week, on Monday, we got this Empire State Manufacturing Index. These numbers have been weak, these regional manufacturing numbers. And this one surprised everyone, 10.8. This was a huge beat. And some of the pundits said, oh, manufacturing is turning. But then you can see on Thursday, we got the Philly Fed Manufacturing Index. It said, no, it is not. So we're getting a few little conflicting signals here. But as you can see, for the most part, this economy is okay. Unemployment claims went up a little bit. Remember, we were down in the 180,000 range. We're up to about the 245. So, okay, the unemployment claims are a little bit up, telling you that the economy is still weakening a bit. Then we got this flash manufacturing PMI right at 50. Anything above 50 is growth. Anything below 50 is contraction. It was better than forecast. So here we are. We're just in this slight growth economy. And that's where we find ourselves. And Darren and I were talking earlier, and this is where I think we basically sit for most of the year. Next week, we have estimates for GDP for first quarter. Estimates are for 2%. I think that's where we are, a 2% economy. And in a 2% economy, it's not great. It's not terrible. Stocks usually just kind of go sideways to up a little bit. Darren, what do you think about this week's news?
Yeah, I mean, my concern right now is I don't know that the Fed has a good picture of the economy because we're getting these forecasts, and the Fed's looking for the forecast. I mean, they're looking for something close to it, but when you've got a 28-point beat on the Empire Manufacturing Index to the upside, but then you've got a 12-point miss to the downside on Philly, and they're geographically very, very close. How do you know what economists does the Fed listen to? Or do they even know? So again, I mean, this is one of those ones that if anything is going to screw this up, it's going to be the Fed making a misstep. Either way, I mean, they've pinned themselves in a corner. They've got a tightrope to walk, and if they go too loose, then inflation gets back out of control again. If they get too hawkish, then there is no such thing as a soft landing. I don't see how they navigate this without a quart bottle of Maalox and a bottle of scotch. I think that's what they're probably all pulling out their hair saying, and privately saying to themselves, we really don't know what is going on with the economy right now. But to get back to your point, I think a 2% grind is entirely doable. And we talked about this last week. There's nothing on the horizon that says that we can see that's going to move the economy, move the markets more than anything else, move the markets up or down. So we're still in that land of unknown unknowns. It's a grind. It's tough to do. You want to naturally psychologically put a bias one way or the other in your portfolio. You've got to go back and forth. You've got to take a look at what the market is doing right now. Erase your preconceptions. Erase what you want. I think this is going to be a lot like the last part of 2014, 2015, where it was just nothing but a grind.
Yeah, and I think that's very good advice. And the grind is a great word to use in this. One of our sayings at Maverick, you guys have heard this a bunch of times: trade the market in front of you. Not the market you want it to be, not the market you think it should be. The market in front of you. And right now, the market in front of you is choppy, ugly, nasty, and really not going anywhere. And as Darren said, you can't trade harder. That's silly. If you try to trade harder here, you're just going to break yourself and break your account. These are the times where you just sit back. If you talk to me on January 1st and I ask you, hey, is every week going to be a good trading week? You're going to say, of course not. There's probably going to be 25 to 30 great weeks this year, and the rest are going to be kind of duds. Okay, is there going to be some months that are duds? Yeah, not every month can't be great. There's going to be some months that are duds. These are the duds. You fully would have admitted to January 1st. If you're sitting there trying to push it right now, you got to admit it's a dud. Just back it off. We'll talk about how to trade it here in a second, but just back it off. You can't trade harder. That doesn't work in the markets. You can't spend more time trading. It's not how it works. So as you can see here, let's take a look at the numbers. Dow had a small pullback. S&P basically flat. Q's down about 2/3%. Russell up a little bit. Oil took a tumble. We're going to take a look at the energy sector. It actually only went down about 2.5%, 3%, while oil took about a 6% dip. And gold came off its recent highs. And that's really what it was. Things just came off their recent highs. So we talked about once it reached this 415 to 417 area in the SPY, that this was resistance. Okay, it's resistance. We said we're probably going to get a pullback. Now I want you to just take a look at these candles here on this pullback. They're green candles. Gap down, run up. Gap down, run up. Gap up, fall, recover. I'm not super bullish here. But for any of you that are saying I'm bearish, and boy, this was the top and we're going to get a huge fall from here, look at the candles. At least for right now, you're dead wrong. You might be right if something happens, but right now, pullbacks with green candles, no way. You are looking in the wrong place. That being said, I think we've got a lot of resistance up here. That is going to take a little bit of time to go through. I think we go sideways for a good 2-3 weeks, maybe even a month or two. I just don't see a lot of upside here. Here we've got the Qs. We've got this pullback. We're still in this base. We came down to the bottom of the base. Look at this. 3 green candles. 3 green candles in a pullback. Every day had more buyers and sellers, but they just gap down pretty much every day. I am not calling for a breakout and a run. Maybe it happens, but I'm positioning my portfolio to be sideways to slightly bullish here. Anyone who is really negative in technology, you have to check your biases. Why? The price action is anything but bearish. Your bias is the thing that's getting in the way. Flush your bias away. Look at the charts. This is a high base. We might be in this base for a while. The most likely thing that happens, though, is a breakout to the upside in a high base. And here we have the VIX. We did get the VIX pop up a little bit this week. Nothing huge. We popped from 18 up to about 20. Look, 20 is about neutral for the VIX lately. Not too high, not too low. It's just about neutral. Everything in this market, every single thing in this market is pointing to this isn't a trending market. You may have a different bias, and I really need to challenge you at this point. Why do you have that bias? Did you read something 2 weeks ago? Do you lean one way to the left on political issues, or do you lean one way to the left on what you think about the Fed? Flush it all away. Look at the charts. It's telling you, don't trade harder. We're up against major resistance. We've been calling for a pause here. This market outlook is the exact same as it was last week. I didn't change it at all. Same words apply today that applied 1 week ago. and will likely apply a 1 week from today. We are moving into earnings, so if there's anything that might move us out of this market malaise, earnings. But look, we got big earnings last week. Individual stocks moved, but the market didn't. I think we see a lot of that. Tuesday, we got Microsoft, Google. Wednesday, Meta. Thursday, Amazon. Those are going to be the big ones. After we get through this week, earnings are going to start to wind down. And again, we're back to the market malaise where we are. On the schedule, we also have one or two things that might cause a little bit of movement in the markets. We are going to get first quarter GDP. Now, look, I don't think this is going to move markets all that much. This is a very in the rearview mirror kind of economic report. This is what happened from January to the end of March. Okay, people are going to look at it. They're going to make some determinations, but I don't think this is going to move the market. It's going to be very interesting to look at and talk about. But I think the only thing that really moves the market this week is Friday, the PCE price index. This is an inflation number. This is the Fed's favorite inflation number, they tell us. This came in a lot cooler than expected last month, and the market liked that. Let's see what happens again on this. This is the only thing I see this week that can really break this market one way or the other. So ultimately, we are at this +2. We're above the 20-period moving average. We're above the 50. As you can see, the slope of the 50 is basically flat, so we can't go to a +3. This is a moderately bullish market on a monthly outlook, and our weekly outlook is a 0, just like it was last week. Now look, we might be up 1%, down 1%. What we're saying is we don't see a significant move happening that breaks us out of this base anytime soon. Now that is the general overall market. Now, I'm going to turn over to Darren here. He's going to go through sectors, but I think, Darren, you're seeing about the same thing in the sectors, aren't you?
Yeah, I mean, there's a lot of things going on. A few things have moved, but we're going to see it when we stack everything together. A lot of stuff is at 0. Okay, so the only thing that really moved this last week, communication services, down 2.6. Energy was down just about 2.6 as well. Everything else was just kind of up 1%, down 1%, or slightly down. I mean, tech was down 0.6. Real estate, actually came back pretty good. But even though they made these 1% moves, a lot of stuff just looks 0. Now you're going to see it. They're either going to be pegged between moving averages, or they might be above the 50, but they're clearly making a base. So there's only a few sectors out there that I think you can look for any appreciable movement. And if the sectors is 0, then I think a lot of the stocks are 0. With a 0 weekly outlook, we're at this thing. We've said it before. You either got to make your trades very, very short, like 5 days or less, or you got to go out 5 or 6 weeks and let the noise go out and something to assert itself. But let's take a look at the individual sectors. So I'm at a +1 on utilities. It looked pretty good. I mean, it was. You saw where it was, but it's just in this base. Now, I think it's closer to the top of a nice high base than a lot of other things are. And, it had had a pretty good move about 3 weeks ago. So mildly bullish on this. I think if there's anything that's going to break to the upside, I think utilities has the best option of doing it. But until the market action shows me mildly bullish, you could even say it's a 0 on this, and I would completely agree with you. Not a lot to grab onto right there. Communication services, they were down 2.5%, so we're between moving averages. I'm at a 0 right here. I mean, we could go and if this goes down like that, it looks like there's support at the 57 level right there, so we're pretty close to that. Then it begs the question: okay, if we get support at the 57, we bounce off it. What's our upside here? Does it go back up to 59? Well, then you're looking again at just a choppy high base, and you have to wait for it to either break above or break below, significantly either way. So again, this is going to be the ones I'm just saying, it's a 0. I can't expect a lot of movement out of anything that I take in the sector right now until it asserts a direction one way or the other. Real estate, they had a pretty good week. But it's, they're still 0. Look at this. They've been at a 0 for the entire month of April right there. I mean, just, just a base. I'm not going to call this a high base. I'm not going to call it a low base. I'm just going to call it a base. And again, we'll see which way we go. I mean, this is very, very, very narrowed, range right here that we've got. Not a lot looking really good. So how do you play that? You're looking at a lot of horizontal spreads. You're looking at a lot of butterflies. I mean, I usually don't play a lot of condors, but you could play this whole sector, a 35, 36, 38, 39 condor, and I completely get behind that. That if you were looking for something in real estate to play, that might be the way to play it. You put that on every week until it breaks above or below. That might be the best way to play real estate. Going on to industrials, again, we're just in this base. Okay, we're that 101 level is just the top right there, and goes down to about the 97.50 level, 98 level right there. That's what we're in. There's a little bit choppy. We're you look at the distance between an inverted. Okay, so the 20 and the 50 are inverted. I can't really call this very bullish, but we're above the 50. And you've got the gap narrowing between that 20 and that 50. So a lot of this price action, a lot of the what we've seen in the past month is just we're in a base, we're sideways. This is where we're going to be. Do we break back down? Could be. Healthcare is the one that looks the best. I'm at a +2 in healthcare. Very orderly pullback down to Thursday. Confirmation on Friday. We had a higher high and a higher low. If you're looking for anything that is going to give you some alpha to the upside, I think you need to be looking at healthcare. There's a lot of stuff that looks really, really good. The entire sector's caught a bid. There's some outperforming names that have just broken out within the past couple of days, and they look like they want to make some fairly significant runs. So I'd be looking for a lot of I'd be looking for my bulls in the healthcare sector right there. Financials, again, caught between moving averages. It's a zero. This is a little bit stronger zero right here than a lot of other things, but there's nothing in it. And you take a look at the price action for those 5 days, 50 cents for the entire sector. That's the movement that we've had, in this. And there's just nobody wants to, go one way or the other on this. There's not a lot of buyers, not a lot of sellers. It's just going through the motions right now. I mean, this is really the week that went nowhere, and you can see it from a lot of what's going on in the sectors. Going on to consumer, again, a base. You see this. I mean, I could basically have Xeroxed about half these charts and just changed the what's in the upper corner. Nobody would have known. That's the way things are looking. So this has got a little bit of downward pressure from the beginning of the year, and kind of makes it look like on the long term ascending triangle right there, and it broke through that trend channel at the beginning of the year as well. But it's just been in this grind for the past month really, and before that it was in a grind for the previous month until we were able to get a little bit of a breakout here. So right now, again, I think we just moved sideways in consumer. Looking at tech, tech took a little bit of a tumble, but again, you draw the lines and we're still in a base. Okay, it's a little bit higher base, and we just barely broke below the 20-period moving average right now. But if you want to call this on a shorter term, 4-day pullback, we haven't confirmed yet. So we could have a little bit more downside, to get to the bottom of the trend channel, and then we'll see if we bounce. And if it bounces, then we go up to the trend channel. I mean, this is one of those ones where you could have a 2% move in a week, and it really wouldn't matter on the chart. You're still going to be in that sideways channel, even if you have good movement. So you can have an up week, you can have a down week. We just need to let the market assert which way they want to go. And looking at materials here, same thing. You've got a support at 79. You've got a top at 82, and we're just going to move sideways. This one looks a little bit better, but again, we're just sideways. And again, we're pulling back within that trend channel. We haven't confirmed yet. Where do we go? Is it a little bit down? I'm just going to say, it's a zero. Now, energy, despite the fact that oil was down 5%, almost 6%, we pulled back in a very orderly fashion. It's still in a channel, but we bounced off of it. Okay, to have energy sector only be down like 2.5% when oil was down, over 5%, there's some strength there. There's people that aren't bailing. Okay, nobody's going in there buying with both hands, but a lot of people are just not selling. So I think this one drifts back up to the top of the channel. I think you've got a little bit of upside right there. And again, we're right at the 20, right at the 50. If you're going to pick a place to bounce, you've got three, I don't want to say indicators, but 3 data points right there, both the 20, the 50, and the bottom of that trend, that if you're going to bounce, it's probably the place to go. So let's take a look at how the sectors measure up. You see everything is just pegged right at 0. You got 7 sectors at 0. Energy and utilities looking slightly bullish, and healthcare is the one I'd be looking at for to do anything with any appreciable move. Healthcare being at a +2. So let's take a look at a few trades. And again, the theme is this is the week that went nowhere. This is Starwood Hotels, and you can't really see it. It was a good place to get short. This just kind of went sideways, and it was one of those ones where we played the diagonal put spread on it, and we're probably at right at that point right there. It's slightly profitable, maybe even at break even. This trade's got a few more weeks to go, and so I'm happy with it right now. The trade's already on. We've sized it for our max loss, sized it with our risk parameters. Just let this one play out and see how it goes. This week we're looking at CubeSmart, CUBE, and we think again this one's going to go sideways. So we're looking at the May 19th. That's the May expiration, 40, 45, 50 right there. So slightly to the downside, by a whole whopping 82 cents. But you're probably going to have a very large profit window here. So this can be profitable. So let this thing play out for a month and see where you go. But again, you can see where support is. You can see where resistance is. And this has been, Cube has been this way for pretty much an entire year. Well, at least the last 3 months is how it's been looking. This one, it can't move too much either way. So I definitely think a butterfly is the way you play this right here. And communication services. Last week we were long Google, and again it just didn't play out right there. We just had that little tiny mini cup right there, and again, you take a look at it, and we're in a channel. At about the 109 level is where is where we go. So is there upside from there? I would say so, because on Thursday, any pullback that it had, we confirmed right there. Higher high, higher low, and it looks the upside. So again, we've got some more time on this one. Let's let it play out. That's the reason we give these things time to go.
Hey, Darren, I think Google has earnings on Thursdays, so everyone take that into consideration. Look at your positions going into Thursday, see if you want to hold it or not.
Yeah, if you want to get out of it, in a market like this, if you don't want to hold through earnings, nobody can fault you on that. What we're looking at this week is EA Entertainment. I remember when it used to be EA Games. This nice high base right here. And again, this is another one. This has earnings in about, let's see, 2.5 weeks. All right. So again, take that in consideration. How do we want to play this? We're going to go out to May, and we're going to go long those 125s. And then this next week, April 28th, let's short the 130s against it. Okay. We're asking it in 5 days to move for a whole dollar. And this is where previous resistance was. And so we just want it to go up slightly, probably some good premium in that 130, even though it's got only got 5 days left on it. That's going to be our max gain for that trade. If it works, then maybe you want to do something for the next week as well. In markets like that, you could have some fun really just going from diagonal to diagonal to diagonal, and then at the last one you could do a vertical spread. That's worked out pretty good. Yeah, you can play this for the next 3 weeks. All right, healthcare. Again, road to nowhere here. We were a long CAH. This one just kept basing on us right here. Again, give this trade some time to work out. If it breaks above, then great. If it keeps holding out here, we'll be fine. Okay, just give it a little bit of time to move. This week we're looking at Gilead Sciences. This is a nice bull flag. Now let's pull into that chart right away, and you can see we had a really good downtrend there that we broke out of in the last week. There's a lot of stuff that looks like this in the healthcare industry. All right, so we broke out there on Monday, and Tuesday really didn't tell us a whole lot, but Wednesday, Thursday, Friday, yeah, we're out of that downward trend, and we want to go up there. So how do I want to play this? On something like this, I'm going to play that 72.50, 87, or excuse me, that should be an 82.50, 87 diagonal right there. Yeah, right. So the only thing I'm asking, get up to 87. That's looks like a pretty good place to go. I mean, you were asking it to, a whopping 50 cents here in a week. And I think we can definitely make it right there. And then, decide where you want to go. I mean, this is the sector that I want to be looking in for anything long. And so this is another one that I would probably play, the 87 one week, the 88 the next, the 89. If it looks like it's got some strength, go $2, $3. Okay, look at the scaling on this. We're not expecting a whole lot. This is only a $2 scale. It just looks like it's really got some movement behind it here.
And Darren, I hope everyone has been noticing and watching us as we've been ratcheting down our targets, ratcheting down what we're asking our positions to do. If you go back to all the trades we're making in the trading room in January, February, they were much more aggressive, much more delta-oriented, much more hate trends and movements. Over the last 2 to 3 weeks, we've been definitely paring down to where we're now doing much more theta, a lot more diagonals and butterflies, and a lot less vertical spreads, long calls and puts and directional things. I think that's what you have to do in this market. Again, you can't trade harder. You just have to dial down your expectations. Last week, we had a bearish call on ADP as actually a diagonal put spread. So again, it's fairly sideways to bearish. And the stock went down like less than 0.5%. So basically, it went nowhere. But remember, in diagonal spreads, nowhere is profits. Nowhere is a good thing. It just hung out there. We've got more time left on the puts. This thing looks really good. No reason why this thing can't break down and possibly make it run lower, but it doesn't need to. We can just hang out on this area and be just fine. This week, we're going to stay with shorts in the industrial sector. Here we've got Vertiv Holdings making a low base here. Now, this one only has monthly options expirations, so we are now no longer able to do a diagonal call spread unless we were to go out to like the June, May, which is way too long for me. I just do not do my diagonals that long. So we have to take a look, okay, what can we do on this trade? Monthly options, the 10, 12, 50 bear call spread. So we're giving this a full month to basically break this base and move down to the next level. This is a very controlled vertical spread. This one is directional. This thing has to move. If you don't want that, go choose something else. There's lots of different stocks that you can go take a look at. But this is the best trade I could find in the industrial sector. In financials, we had a bearish call on PNC, a diagonal put spread, and you can see for the week we popped up, came back down. It basically was up a little bit. So this is exactly perfectly fine. That's why we do diagonal calls and diagonal puts, is that we just aren't asking things to move a whole lot. As long as they don't move, at this point, I think this trade has a very, very small loss on it. And the chart still looks really fine, so we're going to go ahead and just hold it at this point. This week, we're still looking to be short in the sector as well. And there are a lot of stocks in the regional banking sector that are looking terrible. Now, if you remember the financials, we had the same tumble, and the financials have crept back up to about right here in the charts. There are a handful of stocks that have not done that. And U.S. Bank is one of them. And it did not run up when the rest of them did. And then today it took a tumble. I think this is a potential. Again, I don't want to get too ahead of myself. We're not making a trade on my hunch or potential. But I know, Darren, you made a YouTube short today about this could be the next bank that gets a bank run. We'll see. Look, we're not going to play it like this all or nothing. We're saying this was already weak. It broke down. So we're going to make a mildly bearish trade on it. So you can just do a straight vertical spread, bear call spread, looking at the 32.34. And that's what I'm going to be looking for. I'm just going to go out 2 weeks and I'm going to do a 32.34. So if it stays above 34, I take my max loss. If it drops and falls below 32, I get my max gain, and I'm going to get about $1.30 in it in credit. So that means I've got 70 cents of risk. So you can see a very controlled trade for a stock that is potentially about to start to have a lot of volatility. Vertical spreads are great tools to use. It just cuts out the volatility. You don't need to decide where to get out to cut your loss. You don't need to decide where to get out to make a little bit of money. You just let it go. It's all controlled. 70 cents of risk, $1.30, let it go. That's in the financial sector.
Yeah, consumer here. Last week we did a long on CPNG right here, but again, just stayed in this base. Didn't break out for us. We're sitting a little bit of a loss on this one, but give it some time. You look at Friday's candle, nice lower shadow right there, the low end of that range. We could get a bounce next week, and this trade's going to be going to look fine the next week. We'll just wait and see what happens to it. Looking at Foot Locker here this week, sideways to bearish. And you can see it's in this trend. It's at the top of the trend. Had a red candle on Friday, so that's a pretty good indication that it wants to roll back over. So how do we want to play this one? We want to go out 2 weeks and do some sort of butterfly right at the 40. Do the 36, 40, 44. You could do the 38, 40, 42. That's going to have a little more upside to you, but just some sort of butterfly with a target of 40, and I think you're going to be looking pretty good right there. Just give it 2 weeks and see where it goes. Technology. Last week we were short BMBL, and you can't really see it on this chart, but again, it just based. It didn't break down for us. Give it some time, and you will see. So we're probably sitting at break even, maybe a small loss on this one, but again, it looks really good. This is a trade that I'm happy to have gotten into. But if you showed me this trade this week, I would still get into the trade again. I would get in this week. And this is, if you haven't gotten in before, I'd take a look at this one too, because this one's still low base, very weak, weaker than the rest of the sector. Take a look at some other sort of diagonal. This is looking good as well. This week, we're looking at Cloudflare. Symbol for that is NET. A nice little bull pullback confirmed on Friday. This one looks like it wants to go up. Very orderly too. Wednesday and Thursday we're down. We got a gap down on Thursday, but people started to buy it, and then confirmed on Friday. This is a perfect time to get into it. Monday would be very good. You can see you've got some, the 20 just crossed over the 50. The 50 slope is still up, so this is looking pretty good. I'm going to go out. I'm going to do that 60-64 diagonal right there. And so we're going to sell next that 64 for next Friday. And again, we're asking it to make a $1.20 move right here in a week, and I think it probably does. We're just saying, hey, go sideways, just don't go down. But we'd be looking pretty good. And then this is another one. You're going to have 3 more weeks on it. I'd look at doing multiple diagonals. If we break out of that 65 area, I think that if you can break it out of the 65 area, then 70 is the next viable target. But that's going to be, I don't think we're going to do that this week. But just give it 2 weeks, then take a look at where it is.
Let's jump into the materials sector. Last week we had a short on X, U.S. Steel. Now, I talked about how I do like, when things are in a high base or a low base, I do like to take positions at the tops of low bases and at the bottoms of high bases. Because look, they may break out, they may not, but if you take the positions here, then if they break out, it's fine, it's great. But as long as they hold in their base, that's a really good entry point. So you can see we got in here, the stock was down about 3% for the week. We've got one more week left on this trade. 24 was the bottom of our call. So right now the trade's profitable. If the stock goes down more this next week, that's just going to add to our profit. And if it does turn around, we've got our limited risk here on it. This week, I could not find anything that I liked in the materials sector. And Darren, you mentioned earlier about the real estate sector not really going anywhere. And you said, hey, you could just play the entire real estate sector and not choose an individual stock. When I went in and looked, all of the gold and mining stocks that have been really hot, they really came down and broke a lot of their chart patterns to where they're no longer all that bullish. And the things that were really weak, they've had really, really big runs to the downside, and they look a little overextended. So I just couldn't find anything. So this is where you don't need to find anything. Just go with the ETF. Darren, you said it's likely to go, again, flat to a little bit higher. I totally agree. So if we take a look at this, that 81 midpoint, I like that. If you want to be a little bit more bullish, go to the 82. But I'm just going to do like a 78, 81, 84 butterfly. My profit window is going to be somewhere about this large. And if it stays in this area, I make a profit. If it blows out above it, then I've got limited risk on both sides. So let's not even try to find the right stock here in the sector. Let's just play the sector as a whole. Moving on to energy. Last week we had ExxonMobil for sideways, and it was a perfect call for sideways. Now we do have the midpoint at 118. This trade expires this next week. We would love a little bit of bullish move out of ExxonMobil. The trade is profitable at this point, but up to 118 would be even more profitable. This week we are going back to our favorite, Schlumberger. Now I know the stock is called Schlumberger, but years ago, one of our new traders who had never really traded much before said, I'm in this one stock called Schlumberger. And I thought, that's how it should be said. That's phonetically correct. So I now have a hard time calling it Schlumberger. Now they had earnings, and they were a little bit worse than expected. So if you take a look at it, we've got ExxonMobil, which is a sideways, slightly bullish. If the energy sector falls next week, that should probably hurt ExxonMobil. So if you go in and say, hey, why don't we put in a trade on slightly bearish as well? We now have two trades in the energy sector that really, if the sector goes nowhere, they'll both be profitable. If the sector takes off, we'll probably make money on Exxon, lose money on Schlumberger, and vice versa. So we're really kind of hedging our bet here with this trade, and we're saying, hey, look, we want to be slightly bearish here. We could go down to 48. You could choose to 49 to be slightly less bearish. We just want to be somewhere in this area for our profit window. Saying we don't think we're going to break out and run past this. We don't think we're going to dive down to these lows at 44. Probably stay somewhere in this area. So you get to pick where that midpoint is on Schlumberger. Right, that is our trades for the week. If you want to share more trades with other Maverick traders, go to our members area, log in, and let's get that chat going. We'd love to see a really robust chat to where everyone's helping each other out. Wrap this up. Let's watch for earnings report this week. After this week, I'm going to start talking about seasonality patterns and how we're starting to get into the sell in May and go away. I've got a whole video on summer trading that I will post that everyone can watch, and it's a very in-depth breakdown of summer trading and how it typically works over the years. That being said, we are moving into a period of lower volatility. So you just can't ask your trades to do as much. Now look, some summers are wonderful and there's lots of news and lots of things happening. And some summers aren't. A 2% economy where we have some good numbers, some bad numbers. We have a Fed that might be on hold, might not be on hold. Look, this is really setting up, I think, for a pretty boring summer. Things can always change, but my outlook right now is that this summer is more of the same that we've seen over the last 2 weeks. More of a grind to where you just got to grind it out. So let's not ask our trades to do too much. We have to trade the market in front of us. You can't make up a reason to become a super bullish or bearish based on your bias or your wants. The market's telling you don't reach too far. So let's try to just make a little bit of money while we're grinding it out. When the markets change, we can get more aggressive, we can get more delta, and have a little bit more fun. But until then, you really just have to be very focused on grinding this out and making less trades, not more trades. Don't trade harder. That's it for me, everyone. Have a great weekend.
Good trading, everyone.